Welcome everyone. Welcome to today's episode of Market Wrap. I have with me Mr. Pankaj Pandey and Nifty is in the green once again. We saw Nifty come up to 25,100 levels, even 150 levels or other, and then we fell a little again on Friday, but still, all in all, a good week. Sir, what's the outlook right now?
Yeah, hi, good evening, Vishu. Yes, we've seen green week overall, and this is the second consecutive week markets have done well, and again driven by GST reforms. Then we had there is a good possibility of Russia-Ukraine ceasefire, and then there has been rating upgrade from S&P. So in that process, Nifty has sort of jumped nearly 1% to 24,900 kind of a levels. Mid caps, small caps have done relatively better at with a gain of about 2% odd. Sectorally, auto consumption or largely consumption related categories have done very well. And I think what it is clearly highlighting is again markets have been sort of taking support at 24,500 kind of a levels. So from that perspective, I think that becomes a sort of a strong support for the market. And I think on the higher side, again, a lot of developments need to sort of unfold. One, we still don't know whether after August 27th, this 25% additional tariff will be levied or not. But I think that shock value still is not there in the market. But yes, it can still sort of create nervous moment for the market. And which is why, subject to any kind of a positive development there, we could head towards 25,400, which is on the higher side. And again, supports are placed at 24,500 kind of a level. I think these are the levels which we have held in the past 3 months, despite a lot of negative news. Market breadth also has been pretty good. That so about 50, about I think overall percentage of stocks which have crossed the 50-day simple moving average has gone up to 40% from 25%. And this is happening despite the fact that FIs have been selling. So first half of August, we have seen FI selling to the tune of about 21,000 odd crores. So despite all this negative, markets have been holding good support levels, which gives us the confidence that there is a potential for market to sort of head higher to possibly levels like 25,400. Volatility in the interim can't be ruled out because a lot of things still need to sort of unfold.
Absolutely. And there's so much to discuss about GST 2.0, which we will do in this episode. However, before we go there, let's talk about financials for a bit. In this recovery, I think we didn't see financials move a lot.
Correct. So I think financials have a good amount of weightage in the Nifty. Top two private sector banks will have a good amount of weightage. So any kind of a subdued movement has an impact. Now, in the first fortnight of August, we have seen FPI sort of selling about 21,000 odd crores. And bulk of the selling has happened in financial services, about 13,500 crores. While there are some block deals as well. So if you even if sort of strip that out, even then there is a sort of an incremental selling pressure. Technology is still witnessing softer patch. FPIs have sold somewhere about 6,000 odd crores. And I think probably there are some pockets like say cement, capital goods. I think they have seen some bit of inflows. So some bit of a sector churning is definitely going on. But yes, for Nifty to do very well or go higher, I think financials have to perform. So which is why I think underperformance in financials is leading to overall drag in large caps. But mid caps and small caps are relatively better off. But I think a lot will also depend on what kind of news flows we get from this Fed meeting. So the governor needs to highlight in terms of what is the prospect of rate cut going forward. So that would have some implications. So Jackson Hole meeting or commentary there would have some implications. But then again, like I said, a lot of things need to sort of unfold. So FPIs have been negative, but like we have spoken last week, the domestic inflows have been pretty robust. And again, more in mid caps and small caps.
Absolutely. All right, let's get to the GST 2.0 reforms. Can you give us a big picture first, and then let's go about the sector specific impacts?
Sure, Vishu. So, for example, I think the government we all know is proposed 2.0 reforms, which aims to rationalize the multi-slab structure into two slab structure, which is 5 and 18 odd percent. and a higher rate of 40% will be maintained for luxury and thin products. And largely, purpose of this is to make products more affordable and boost consumption. And I think most of your daily needs products are taxed at about 12%, and which are expected to move at 5%. And I think overall sense is that this will happen before Diwali. So key sectors which are going to benefit is automobile, FMCG, which is packaged foods, dairy products, then discretionary products. In discretionary, you get apparels, you get hotels, you get ACs. And then cement is another sector which is extremely important, and insurance is another sector that should benefit. And I think what we have already seen is that the group of ministers have principally approved GST 2.0. So from that perspective, early September is where we'll start seeing some kind of inflows. And only hitch is that since now people are also aware that there will be reduction in prices of a lot of these items, so there is a potential that you'll see a short-term deferment of demand in lieu of the GST rate reduction. So don't be surprised if your GST numbers or if your quarterly numbers for some of these consumption categories where the GST is going to get lower. I think the quarter number for September might turn out soft. So I think that is the only catch, or that is the only mental frame which people should keep there in mind. And but eventually that will sort of get captured in the Q3, which is October to December quarter. So from that perspective, I think people should keep that in mind. That is because there is a natural tendency to sort of do consumption when the prices head lower. So that is where our sense is. But overall, I think while there could be a revenue loss, but in general, our sense is that this is going to be one of the biggest boosts to consumption. And so while we had tax benefits followed by GST cut, and I think another big booster is expected to come next year in terms of eighth pay commission. So I think consumption overall is getting a good boost from the government.
Absolutely. Absolutely. Right. You said discretionary as a theme. I think even during our budget, due to the tax breaks, discretionary consumption as a theme was being popularized. And now, once again, GST 2.0, this may get a boost. What exactly are you looking at in this discretionary consumption theme?
So Vishu, I'll talk about segment wise. So for example, in FMCG, packaged foods and dairy products are one category. Now, when you sort of look at here, you get snacking items for consumption, nuts and dry fruits. Then you have packaged food juices. So currently they are under the 12% GST rate. Then similarly, you have dairy products like ghee, cheese, butter, condensed milk, beverages, where milk is there. So all these contain 12% or attract 12% GST rate. So there obviously there will be cut in duty rates. Companies which are going to get benefited is again Tata Consumer. You would have Dabur, Nestle, and some of the milk-oriented milk processors like say Dodla Dairy or Hudson Agro. So they'll benefit. In a discretionary category like say for example apparels and footwear. Now, here also, when you look at in the apparel segment, GST rate of 12% is charged for any garment above 1,000 rupees. Similarly, if you're buying a pair of shoes, which is costing more than 1,000 rupees, the GST rate is 12%. So again, this category is again expected to witness lower GST rate. So you will have companies like Trent, Urban Fashion, Relaxo, or Bata, which will benefit. Another category is, say, for example, hotels. Now, hotels will benefit from the perspective that hotel rooms which are priced, say, between say 1,000 to 7,500, I think they're likely to come under 5% tax bracket from about 12%. So one, there could be benefit because of that, and the other is since cement prices, or we are seeing a cut in the cement GST rates as well. So even the capex per room for some of these players might also sort of come down. One more thing is that while on the economy class, the GST rate is 5%, but on the business class, the GST rate is about 12%. So it is possible that you might see some reduction there, which again will lead to more business travel. So from that perspective, again, your hotel companies will benefit the likes of Lemon Tree largely because it's a budget hotel, ITC to some extent, ITC to hotels to some extent, and Chalet Hotel to some extent. And last in the consumption category is the consumer durables. And consumer durables, again, you have, say, something like, say, for example, you have categories like, say, ACs or TVs, which are more than 32 inch. They attract 28% GST, whereas a lot of other items like refrigerator, washing machine, water purifiers, so they attract about 18% kind of a duty. Our sense is that a potential rate cut there will lead to a decline in prices of 8 to 9 odd percent. And I think ACs will face a tricky situation because we have already seen early monsoon that has led to higher inventory in the system. So companies are expected to sort of pass on those prices or cut. That will lead to lower margins. And obviously, in the near term, there will be some pain. But structurally, AC is a category, one of the few categories where the penetration is in single digits, which means that structurally this can do very well. Blue Star, Voltas, Crompton, Greaves Consumer, Dixon, Amber, I think all of them will sort of tend to benefit. And I think AC is one of the biggest power consumers also when you look at your domestic bill. So from that perspective, also power sector will indirectly benefit. But these are the consumption categories I think which should see immediate benefit of a GST cut.
Right, right. I think auto sector was very happy after this news came out. We saw big jumps in auto stocks. What happened there?
Oh yes, so I think auto. See, the pain point has been that auto entry level auto segments, whether it is two wheeler, four wheelers, have not been doing well. So when you sort of look at auto is one of the most heavily taxed sectors. It's a big sector, contributes nearly 7 to 8% of the GDP. Now, the only segment which is attractive is the EV, which attracts a 5% GST rates. Otherwise, everything in auto is 28%. On top of it, you have a compensation cess of nearly 1 to 22 odd percent. So, which means that you have duties in the range of say 29 to 50 odd percent. Now, again, different segments have different kind of assess, but for two wheelers, the effective taxation is somewhere about 28 to 31%. Three wheelers is 28%. CVs again quite high. And so overall sense is that when we sort of see a reduction in the GST rates, the decline in the prices could be in the range of 5 to 10 odd percent. And I think compact cars will be one of the biggest beneficiaries because for them, the tax incidence will come down from 28 to 31% to about 21 odd percent. Whereas I'm not very hopeful for bigger SUVs because while there is an expectation that the overall taxation could come down from 50 to 40 odd percent, but it is unlikely that it's considered as a luxury good. So I am not very hopeful. But let's see, a lot of things need to sort of unfold. But again, I think entry segment has, like I said, has been the real pain point for the players, and which is why this will be the biggest beneficiary. And mind you, auto is a sector which has got multiple benefits. You have got a big auto ancillary sector. It is one of big employers, so from that perspective, auto becomes a very important sector. So Maruti in the passenger vehicle space and Bajaj Auto in the two-wheeler and three-wheeler space look obvious beneficiaries. Obviously, a lot of other will benefit, but these are the prime beneficiaries according to us.
Right. You mentioned cement sector as well when we were discussing the consumption sector. I think you've been liking this space for a while now, and now that GST is going to reduce from 28, is likely to reduce from 28 to 18. What is the outlook?
So, Vishu, the irony is that when you look at other construction materials like granite, marble, steel, ceramic tiles, sanitary wares, there the GST rates are in the range of 12 to 18 odd percent. But it is the only cement which attracts a duty of about 28 odd percent. Now, when the duty gets reduced from 28 to 18 odd percent, our sense is that effectively you will see a price decline of about 25 rupees per bag. And cement companies have already been doing well. Last year was a bad year for them, 4% demand growth. This year, most of the companies are doing high single digit kind of a growth, and which is likely to be sustained next 4 5 years. Whereas the supply is going to grow at a lesser pace, so which means you will have better profitability plus price cut. So from that perspective, this sector is, I think, a lot of tailwinds are sort of emerging for this sector. And I think our sense is that this sector again is one of the biggest beneficiaries. If I have to highlight companies, Ultratech, we like this company with a target price of 15,000, Ambuja at 700, Dalmia Bharat at 2,650. JK Lakshmi 1100, and a small cap stock like say Sagar Cement with a target price of 305. So cement, yes, looks pretty good to us, and we have been liking this for a good period of time. I think it also benefits the entire real estate sector because the cost of infrastructure or housing construction could come down, and again, this will lead to better demand for cement directly or going forward. So that way, I think the sector is in a sweet spot.
Right. And finally, coming to the banking and finance sector, I think this is one of the most complex ones to understand. Insurance is still somewhat straightforward, but to understand the impact on banks, I think we need some more detailed understanding from you.
So I'll come to the easier part. So easier part is on the insurance. Now, on the term insurance, the expectation is that it will come down from 8% to 5%, or probably might get exempted also, because somewhere down the line, government wants insurance for all. So that is very much possible. Similarly, on the health insurance side, you could see a rationalization. So it does benefit BFSI in general because a lot of cross-sell opportunities come up, fee-based income can go up. It is also actually beneficial for NBFCs, auto financiers, and retail-focused players, the likes of say Bajaj Finance. So from that perspective, it is good for the entire BFSI as a pack. I think the only catch is that in case if these companies do not get input tax credited, then that means that their operating expenses will go up because ITC benefit or input tax credit benefit will be lost. So while they'll have to pass on the cost, but they might have to witness some pressure on the margins. So that way, that might be slight negative. So again, this might sort of play out in the shorter term. But structurally, if I have to sort of think, then when you look at a lot of these items, so for example, food or non-food items, the rates are expected to obviously come down from 12 to 5%. In some cases, some of the other categories will come down. So our sense is that about 8% of your CPI or inflation basket will see a price decline of 6 to 8 odd percent, which means about 50 bips kind of a reduction in inflation. Now, if you sort of notice the recent RBI policy, they've been saying that first from next year onwards, inflation is going to be 4.4% for Jan to March and closer to 5% from April to June because of the lower base effect which we are carrying. But in case if we see a reduction in inflation of 50 odd bips, another reason for reduction in the inflation could be that see of the overall inflation basket, 45 or 46% is from foods. And again, any volatility in food prices makes your inflation volatile. So I think structurally that is expected to sort of come down in this weight realignment. So overall sense is that you could easily see a reduction in the overall inflation numbers from those even from the 4 to 5% kind of a number which RBI is predicting, which means that you will see a rate cut of 25 to 50 bips, which is very much possible. And which again means that while we have been expecting recovery in the bank NIMs or margins in Q3 onwards, if further rate cut happens and the recovery will happen in FY27. While it is structurally not negative, but near term it creates pressure on the earnings of bank. But in general, it is going to boost the demand for a lot of products because when you look at your home loan rates have come down by 60, 70 odd bips, further 50 bips is possible, and another if 25 to 50 bips happens, then you will see a good amount of decline in your a lot of rates, and which again could boost consumption, and overall it is very beneficial for banks. And lower interest rates again is positive for markets because it usually boosts up your P multiples as well. So I think those are the other benefits or indirect benefit which will come as things sort of unfold going forward.
Right. So, before moving on from GST, another last sector that I want to ask about is the healthcare. What impact do you see on healthcare sector?
Vishu, not much is spoken about, but when you look at medicines, medicines attract two types of GST. One is 5%, which is on essential medicines, and then you have 12%, which is on the rest. And our sense is that while essentials at 5% may not be touched, but it is very much possible that some medicines might move from 12% to 5%. So while demand is non-discretionary in nature, but I think government might look to provide medicines or make more medicines affordable. and which is why our sense is that some of the categories might witness lower rates. Although most of the companies are still not talking about it, but our sense is that you could see beneficiaries in the name of, say, some of the MNC names like, say, About, PNG, domestic players like, say, Sun Pharma, Cipla, Torrent. I think all these companies have good amount of exposure on the OTC side, where they have got good brands. So that could be a beneficiary. On the hospital side, now, GST is levied only on hospitals or room rates which cross 5,000 rupees. It is very much possible that there could be some exemption there. And another benefit to hospital is that the health insurance will attract lower rates, or it could be 5% or complete exemption. And so from that perspective, even the hospitals will also benefit right from. So again, beneficiaries would be Apollo Hospitals, Narayana, Rainbow Children, FMCG. So these are some of the names which we track and which we prefer.
Right. And finally, moving on to defense, I think there's a bunch of good news for HAL this week.
Oh yes, so I think it was long expected. Government cleared 97 LCA jet acquisition worth 62,000 odd crores for HAL. Now, what it does to HAL is that they were sitting on an order book of about 1.8, 1.9 lakh crore. Now that has gone up to about 2.5 lakh crore. So, which is 8 times their trailing 12-month revenue. So it's a very strong visibility. Good part is that we will see execution also moving forward because they've started getting engines. So I think they have the capability to manufacture about 24 aircraft on an annual basis. And with probably private sector help, it is possible that they might inch up this number to about 30, but still they'll take about, I think all this will get delivered by 2029. So obviously a big benefit to HAL, and we like that company. But on top of it, it's not a standalone product. A lot of electronic goes. So accordingly, Bharat Electronics, Astra Microwave, data patterns, because these companies provide avionics, radar, or electronic warfare systems. So they should benefit. Dynamic technology provides a fuselage for this, so they should also benefit. I think defense, my sense is that has seen a decent amount of time and price correction, and I would expect this segment to benefit from sector rotation. All things are in place for this sector to do well, and selectively, we like companies like, say, for example, HAL, Bharat Electronics, or Astra Microwave, Data Patterns, and Dynamic Technologies, and Medhani. So these are the names which we prefer, although we prefer more, but those are more expensive.
Right. And finally, moving on to our last segment of the day, hidden gem of the week. Which will it be this time?
I think it's quite an obvious choice, Vishu. I think auto is one of the biggest beneficiaries, while recommend Maruti. Maruti has been under pain for a good period of time. If you exclude this current year, last 7 years, it hasn't seen much of a price performance. And this is one of the companies which has got one of the highest market share, 41%. And again, they have got very popular model which everyone knows of. And I think when you look at from a penetration perspective, while we are the third largest passenger vehicle market, but in India, the penetration is still quite low. So we have 30 cars per 1,000 people. I mean, in the Western developed countries, we have 500 cars per 1,000 people. In a country like China, you have 200 cars per 1,000 people. So penetration is definitely lower. Overall sense is that lower tax benefits plus GST reforms plus the upcoming 8th pay commission, all these are good tailwinds for this sector or this company to sort of do very well. And I think Maruti is also expanding capacity from 24 to 40 lakh by FY31. And I think they are also present across all platforms, so spanning from their good and CNG hybrids, EVs. So they're not only betting on the EVs. So from that perspective, they have placed their bets very well. And our sense is that with 10% kind of a volume growth, slight premiumization, they could be delivering 15% kind of a top line and bottom line growth. And we see 15% upside from current levels to target of about 16,550. So I think Maruti looks quite obvious to us from a beneficiary perspective, and which is why I think it's a good time to buy this stock.
Absolutely. Well, that was it this time. Thank you so much, Pankaj sir, for your time and insights. And thank you so much, everyone, for watching. We'll be back next week. Until then, if you have any questions, please put them down in the comments and we'll try to get back. Thank you once again and have a great weekend.
Thank you so much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.